What's going on, guys? Welcome back to the channel. My name is Anfernee McLemore, and in today's video I want to give a rundown on how to invest in the stock market even if you're broke with $0, and especially if you are a teenager. Now these days investing in general is getting a lot more accessible to younger people. Teenagers these days are buying a lot more stocks and just overall more interested in investing than it was back when I was in high school. So in this video, I plan to give you the step-by-step tutorial that I wish I had when I was coming out of high school in order to get started investing in the stock market. I'm going to share some of the mistakes I made so you don't have to make them for yourself. And if you stay all the way to the end of this video, I'm going to give you a live look into my actual portfolio so you can see exactly what it is I'm invested in and how I actually invest my money. So the very first thing that you need to do as a teenager, if you want to get started investing in the stock market, is just understanding how this whole thing works. A lot of people make the mistake and assume that investing will turn your $1 into $1 million. This frankly is not likely, although it is possible in the stock market. You should not go in expecting this to happen. Yes, you can build crazy amounts of wealth in the stock market, but you really want to understand how this works. And a great way to do this without having a lot of money in the very beginning is using this method called paper trading. Now what paper trading is when you open an account with a company and they give you an account with fake money in it so that you're able to practice investing without putting your actual money at risk. Some of the paper trading accounts that I love are the TD Ameritrade Think or Swim account, where they give you about $100,000 to play with in order to practice investing. The only thing I don't like about TD Ameritrade paper trading is that it is delayed by 2 days. However, there is another option, and if you open up a WeBull account, you can paper trade with WeBull using a $1 million investment account. And the reason why I would recommend paper trading first is that you're able to practice buying and selling different stocks. You're able to understand how a market order works, how a limit order works, and overall you don't have the risk of losing your actual money in order to get this experience. When I first started investing at the age of 18, I was putting my actual money at risk and playing with things like penny stocks, dollar stocks, and overall just trying to have fun and losing a lot of my actual money while just making a ton of mistakes. So if I had started with a paper trading account, I could have still had all that experience and understand how the stock market works while not putting my actual money at risk. So overall, I would recommend you trade with a paper trading account for at least a month, but about 3 to 4 months, just so you're really comfortable with investing and understanding how your money can really grow. So now, assuming that you have a good understanding of how to invest and overall just how the stock market works by doing some paper trading or just by playing around in different apps and just seeing how to buy and sell, what you would want to do now is actually start to put a little bit of skin in the game and actually open up your first investment account. And honestly, when I was getting started investing, I thought that this process would be a lot more difficult than it has to be. If you ever signed up to Instagram, TikTok, or any other social media platform, then opening up an individual brokerage account is almost exactly the same. The only thing you really have to choose here is what company you want to invest your money with. Now these days there are a lot of brokerage companies and most of them have the same level of security and almost the exact same features, so it's not really a big difference whether you want to choose one or the other. So if you want to choose big traditional companies like TD Ameritrade, Charles Schwab, or Fidelity, those companies are perfectly fine. However, their software just doesn't look as cool as some of the newer apps like Robinhood and WeBull may use. These new app-based brokerages really appeal to the millennial mindset, where they make investing look more interesting because you're able to track your portfolio on a day-to-day basis and almost on a second-by-second basis. I used to use Robinhood a ton in the past. I have a few videos on my channel going over my Robinhood portfolio. However, recently these days, most of my money is invested with Fidelity, and I also use the individual brokerage app called Public. And what's so cool about Public is that you're able to follow other investors, so when they make a new investment, it's posted to a feed sort of like Twitter. This way you can keep up to date with some of your favorite investors, and I usually try to make some trades with Public on a weekly basis. So if you want to sign up and use Public for yourself, there is a link in the description below, where if you sign up using that link, you will get a free stock just for signing up and creating an account without even having to deposit any money. And also, you don't have to use apps where you have to pick the stocks yourself. You can use other investing apps like Acorns that round up your nearest cent, and it uses a robo investing software to invest your money for you, so you don't have to worry about knowing what stocks to pick. As I said, neither of these investing apps is the best one to pick. It's really about what feels the best to you. If you feel better investing with Robinhood, then by all means go for it. But if you feel better investing with Fidelity or Public, by all means choose that brokerage and get your account open so that when you are ready to start investing, that it will be ready right there for you. But after you open your account, I'm sure your next question is going to be, well, what do I actually buy? What is it that I should invest in order to grow my money? So while I can't give you a perfect answer of what to invest in, what I can do is show you what I'm invested in and give you the reasons for that. So when you get started of trying to find out what you want to invest in, you really have two options. You can either invest in individual stocks or you can invest in this thing called index funds. So individual stocks is probably what you think of when you think about investing in the stock market. This is like buying shares of Tesla, Microsoft, Apple, buying individual shares of specific companies so you can grow your money. However, what an index fund is a company that gathers a big pool of money and invested in hundreds of different companies, and then they sell slices of that overall portfolio as shares to investors. So with an index fund, you don't have to pick whether you want to invest in Apple or Tesla or any specific companies. You can simply buy one share of an index fund and invest in everything that the index fund holds. This is the investing style that I use personally, and I love it because it provides a lot of diversification. However, as I said, let's look into my investment portfolio so we can see exactly what it is that I'm invested in. So as of right now, my Fidelity portfolio is valued at about $22,000, with most of that money being in my Roth IRA that I'm currently trying to max out for 2022. And if you want to see live updates of my trades in this portfolio, there's a membership link to the channel where if you sign up for about $2 a month, you can see all of the investment updates that I make to this portfolio in almost real time. And if we just click into my Roth IRA, we can see that I only have 3 holders in this portfolio. I have 3 index funds, a Fidelity Total Stock Market Index Fund, a Fidelity Real Estate Index Fund, and a Fidelity International Market Index Fund. And how I invest in this portfolio is I put 63% of my money into the Total Stock Market Index Fund, 27% of my money into the International Market Index Fund, and then 10% of my money into the Real Estate Index Fund. And whenever I add any new money to the portfolio, I just add money to whichever index fund is a little bit underweight, and then I try to balance it out that way. I don't want to or ever plan to sell any of the index funds in this portfolio. I just try to add money as consistently as possible and keep those investments as in line as I possibly can. If it ever does get really out of balance, then I may choose rebalance once a year. However, anytime you sell a stock, you will have to pay taxes on that gain, and that is what I'm trying to avoid. And the next question that I get a lot from people who are just getting started investing in the stock market is how often they should trade or buy and sell different stocks. And this also comes to the question of, if I have a lump sum of money to invest now, should I invest it all at once, or should I dollar cost average or invest a little bit of money over a long period of time? And here's where I stand on both of those questions. I believe, and history has proven, that time in the market is much more valuable than time in the market. This means that the longer you are invested, the more money that you make, no matter if you're trying to time the market and buy the dip at the bottom or if you're trying to sell at the top. If you have a lump sum of money right now, the best thing that I recommend you do is go ahead and invest all of that money right now and just plan to keep it in the market as long as possible. And also, if you're trying to time the market, more than likely you may miss the bottom, and more than likely you may miss the top, and you might end up losing money on trading stocks that are down that could have rebounded the next day and put you in a profit. The whole thing about investing your money is being patient. You don't have any direct control over how fast your money grows. However, what you want to do is ride the wave of the economy and become a millionaire just by making a choice of buying consistently and buying steadily into the market. Over the course of history, there has been ups and downs in the market, but there has been a steady trend of the economy always growing up, no matter if there's a big dip 1 year or 2. Historically, the market has always rebounded, so what you should do is just continue investing and invest as much as possible. So to answer the question of how often you should trade, my personal investing style involves only buying. I want to buy assets and keep them as long as possible because those assets will grow in value, and those assets will also pay me dividends as long as I hold them. If I do decide to sell a stock, I will be creating a taxable event where the government will tax me based on how much money I make. However, if I don't ever sell the stocks, then I won't ever be taxed on those capital gains, which is one of the main reasons that billionaires like Warren Buffett and Bill Gates are able to pay much less in income tax than the everyday person is. So how much you should trade? I think you should trade as little as absolutely necessary. So now that we talked about how often you should trade, let me give you a visual representation of what your money could turn into if you started investing today. Because investing your money is not about getting rich quick. It's about letting your money compound over time and allowing time to work in your favor. Compound interest is the 8th wonder of the world. It is the reason that Warren Buffett, one of the richest men on the world today, gained 99.7% of his net worth after the age of 52. So right now I'm going to take you into my computer, use a portfolio visualizing software to show you how much money your money could grow to if you invested today, starting at the age of 18 years old. So as we dive into my computer, we're going to go to one of my favorite websites called portfoliovisualizer.com and look up a Monte Carlo simulation. Basically what a Monte Carlo simulation is, it is a simulation of 1,000 possibilities of future portfolios had you had your money invested today. So it's going to show you that 10% of the time this happened, 50% of the time something else happened, and then 90% of the time this specific thing happened. So as we look at this, we only have a few things that we have to fill out here. Let's say we started off as a teenager with an initial amount invested of $100. That is all the money that we have to contribute to our investment portfolio right now. However, if we contribute just another $25 every single month to our investment portfolio, let's see exactly what that will grow to in 30 years. So for our asset class, we're going to keep it really simple and only select the US stock market at 100% allocation. This basically means that all of our money is going to go to the US stock market. And as we run this simulation, we can see that by year 30, our $100 initial investment and our $25 monthly contribution will have gone to about $100,000 in 30 years. Now, this may not sound like a lot of money in 30 years, but let's just remember, we're only contributing $25 a month. So let's go back up here and imagine that as we get older, we contribute more a month to our investment portfolio, and we end up contributing $1,000 a month to our investment portfolio. So if we run this simulation, in 30 years, our investment portfolio will have grown to $3.8 million. And that is simply because our money is compounding over time and constantly working harder for us than we are working for it at our 9-to-5 job. But with all that being said, if this video helped you at all with getting started investing in the stock market as a teenager, or if you're in your 20s or 30s or anything like that, then go down and change the light color of your boy, as it really does help the channel out. Also, don't forget to check the link in the description below, where if you sign up to public and create an account, you will get a free fraction share of a stock, and there's about 9 different stocks to choose from. So that's a great way to make some free money and getting started on your investing journey in a positive note. Don't forget to subscribe if you like content like this, and I'll see you in the next one, guys.